Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending March 11th, 2022. First, looking at the indexes for the week, the TSX was up, but the US indexes, as well as oil, were down. Perhaps 2022 will be the year when Canada outperforms the US. At the start of the week, there was contemplation of adding a ban on Russian oil and gas to the sanctions against Russia, further driving the price of oil up. Europe may not be able to get a replacement for Russian oil, especially Germany. Europe gets 25% of its oil and 40% of its natural gas from Russia. If Russia's resources are off the market, the price of oil will go up further, but will not affect the North American economy. The US gets 7 to 8% of its oil from Russia, and later in the week, the US did decide not to buy Russian oil, so Canadian oil is starting to look better and better. If nuclear weapons deal is reached with Iran, 1 million barrels of oil could be on the market, alleviating the issues from the missing Russian oil to some degree. Releasing oil from the strategic oil reserve in the US happened earlier, but it is so little that it is a psychological and political help, not actual help. As a result, oil hit a 13-year high early in the week. The world won't really work with oil prices at these levels, and with inflation and a slowing economy, the stagflation word keeps coming up. Oil had wild movements throughout the week. The market was undersupplied before the Ukraine conflict, and banning of Russian oil caused the latest spike, slightly offset by the Iranian oil possibility being allowed onto the market after the treaty regarding their nuclear weapons program is signed. Prior to the conflict, oil was around $90, which I think oil would immediately fall to if peace treaties were signed tomorrow between Russia and Ukraine. Demand destruction will begin around $140 a barrel, but until that price, demand is inelastic and won't decrease. Banks and life cos are going down some because there is a risk off attitude with all the risks around the world, and so people are buying bonds, lowering their yields. Bonds is where life cos put their premiums and banks lend money at pegged to the yields. So the lower yields are hurting the financial companies. US wages and salaries are rising at a slower rate than inflation. This is going to prevent inflation from going up significantly, but it is still contributing to it in the short run. The US CPI inflation for February is at a 40-year high, 7.9% year over year, which is in line with estimates, and this is before the oil prices increase for the Ukraine-Russia conflict. European Central Bank is also leaning hawkish and is looking at removing stimulus. Canada added 336,000 jobs in February versus 127,500 expected as restrictions were lifted, and more than recovered January losses. Unemployment rate is at a 5-decade low. We're at full employment and wage pressures are setting in. The economy is at full capacity and appears to be able to take the Canadian rate hikes. The bond market is pricing in 6 rate hikes in Canada in 2022, and with the strength, there's even a thought that one of them will be a 0.5% rate hike. Next week, on Wednesday, we have Canadian CPI numbers for February, as well as the US Fed interest rate decision, which is widely expected to be an increase, likely 0.25%. US and Canadian companies continue to report next week as well. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.